Welcome back to the Cryptoworld channel, everyone. My name is Josh, and right now, Bitcoin is finally breaking out above this massive area of resistance, liquidating a bunch of short positions in a short squeeze, and this has happened just after the Federal Reserve cut interest rates by 0.5% or 50 basis points, which heavily affected the markets here in the short term. But with that being said, Bitcoin is still flashing this short-term warning signal, while Ethereum is still playing out this bullish divergence. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before we take a look at the Bitcoin charts today, we need to talk about the news today, because over the last one day, we saw the Federal Reserve cut interest rates by 50 basis points. That's 0.5%. And so obviously, as I mentioned in my last video here on the channel, this was very bullish for markets. I said yesterday before this happened, I said, if we get the 50 basis point rate cut, expect bullish price action in the short term. That would be a bullish catalyst for Bitcoin. And I posted this in real time within a matter of seconds after this came out over on my Twitter. So if you want to get these extra real-time updates throughout the day, check out my Twitter link down below. But with that being said, if we're looking at the effect of that rate cut right here, or the rate cut announcement, as soon as that announcement came out, as you can see my tweet right here, that happened right as this Bitcoin pump started. And this screenshot, by the way, is on the 1 minute chart. So basically each one of these candles is 1 minute. And we saw pretty much a $1,000 pump in the price of Bitcoin within 1 to 2 minutes from this information getting released. And then we basically retraced that entire pump and then bounced again. So a lot of volatility here in the short term, and then continued with more bullish price action, which was the expected outcome for the 50 basis points outcome. And now some people are talking about this being a bearish thing because, of course, the last few times where we've seen a 50 basis point rate cut straight out of the gate has coincided with a major financial crisis. And I must say it is unusual for the Federal Reserve to do a 50 basis point rate cut, not a 25 basis point rate cut, if everything was totally okay. So, of course, this begs the question, are things actually okay in the economy? Maybe this was a political thing. But either way, if we're looking at the last two times, we saw basically the first rate cut in a rate cut cycle being a 50 basis point rate cut. The last time this happened was right before the global financial crisis of 2008, and the time before that was right as the dot-com bubble was basically unwinding, and basically as we saw a major financial meltdown in the early 2000s. But a lot of people look at this and say, well, this must mean that we're about to see a major financial meltdown, but it's important to understand correlation does not equal causation. So it was not the 50 basis point rate cut that caused the global financial crisis in 2008, and it was not the 50 basis point rate cut that caused the dot-com bubble to crash. It's just those 50 basis point rate cuts back then in early 2000s here and 2007 going into 2008. Those, of course, coincided with those meltdowns, but did not cause the meltdowns. They were caused by other factors, of course. And so if we want to predict a recession or a meltdown of some sort, we have to look at other factors, not just these interest rates, because these interest rates do not necessarily cause these meltdowns. Sometimes they can be an indication of things perhaps not doing too good. So this 50 basis point rate cut, of course, might be an indication of things not doing too good right now. But once again, it would ultimately have to look at other factors, not necessarily interest rates, to determine the health of the economy. And of course, fundamentally speaking, lowering interest rates is a bullish factor for the economy. Even in 2008 and the early 2000s here in the dot-com crash, lowering interest rates was actually helping those crashes, because if interest rates weren't lowered during those financial meltdowns, it's very likely that those meltdowns would have been a lot worse than they already were. And of course, if we're looking at time periods where we had very low interest rates, like in the 2010s or in 2021, for example, those periods also coincided with bull markets, essentially in the stock market or in crypto, for example, in 2021, and also basically in the late 2010s. And ultimately, it was the massive raise in interest rates during 2022 and also back during around 2018. Those periods coincided with bear markets across financial markets. So ultimately, lowering interest rates is fundamentally bullish. It's just sometimes this happens at the same time as other factors that are very bearish. Like, for example, the housing crash in 2008. It was the housing market that was very bearish, not the lowering interest rates. But with that being said, taking a look at the Bitcoin charts today on the 4-day time frame, not much has changed right here over the last 1 day. So if you're new to the channel and you want to know more about this bearish trend right here, check out my last video here on the channel. And the same can be said about this 2-day time frame. Right now, we're still within a short-term bullish trend that is technically still within a larger bearish trend, at least as of right now. And if we're taking a look at this daily time frame over the last 1 day, the DXY has basically been chopping around sideways, so we don't really have a lot of new information right here. So getting straight into this daily Bitcoin chart, and what we have seen over the last 1 day is a confirmed daily candle close finally above this massive area of resistance, which was previous support back here, and that's sitting in between around 60.2k to 61.2k, so around 60 to 61,000 approximately. And so right now, considering we have confirms this breakout so far with 1 daily candle close, this area should now become new support. In case we see any sort of short-term pullback, once again, expect support at around 60 to 61,000, give or take. And below that area, if we were to see a break back below around $60,000, in that case, we could find a small amount of support at around 59,500, some more support at around 58,000, and a massive area of support right here in between 56 to 57,000. And as for resistance, if we continue this breakout further to the upside here, we could find some short-term resistance close to 63,000 and more resistance at around 64,500, which is an important area to pay attention to. And then we have a massive area of resistance in between around 67 to 68,000. And now if we see a confirmed breakout well above 64,500, basically breaking out above this previous high in the price of Bitcoin, that would be the first sign of a bullish trend reversal on the larger time frames, because that will be a new higher high here on the larger time frames. And then especially if we see a confirmed breakout above around 68,000 to 68,500, breaking out above this high right here and this resistance, in that case that would also mean a breakout above this resistance, which is sitting close to 68,000. And so if that happens, if we see a confirmed breakout well above 68,500, give or take, then in that case expect a major bull market to continue, likely for multiple months, if we break out above around 68 to 69,000, give or take. But for now, technically speaking, if we're looking at the trend as of right now, based on the highs and the lows in the price chart, for now, we're technically still within the bullish trend in the short term, but we have not yet confirmed a bullish trend reversal on the larger time frame. So technically speaking, if we're looking at the highs and the lows, we're still trending in the more bearish direction on the larger time frames. And if you want to trade these moves in the price of Bitcoin or any other crypto, personally, I take just about all of my trades over on Bybit. So I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it'll take you to this page right here, which is a massive lucky draw happening right now over on Bybit, where you could potentially win up to $100,000 just by trading crypto using the link down below this video. And so if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is Bitfinex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitfinex, which means if you're in the US or the UK, for example, or another country where you might not be able to access Bybit, you can access Bitfinex if you use the link down below this video. And also, if you use that link, it'll get you a 5.5k deposit bonus, and only if you use that link, you can get an exclusive 10% discount on all trading fees on the Bitfinex exchange forever. But that's only if you use the link below this video to make your Bitfinex account. And so as another option out there other than Bybit, once again, there is Bitfinex. Links down below if you want to claim those extra bonuses. And with that being said, if we're taking a look at the short term for the price of Bitcoin here on the 8-hour time frame, we still have a bearish divergence that is flashing right now, but not yet confirmed. Because first of all, as I said in my last video, we previously confirmed this bearish divergence between these two highs right here, and that did play out over around half a day, give or take. But like I also said in my last video, we have an upcoming Fed meeting, and if we get that 50 basis point rate cut, expect a bullish move. I said yesterday, all bets are off. If we get the 50 basis point rate cut, we'll likely see a breakout to the upside, which is exactly what happened as soon as we got that 50 basis point rate cut. And so that effectively invalidated this previous bearish divergence right here, but there is still this new bearish divergence that's forming right now between this new higher high in the price of Bitcoin and still technically a lower high forming in the 8-hour Bitcoin RSI. But as of right now, this new bearish divergence is not yet confirmed because we still need to see at least one and ideally two red candle closes confirming here in the price to actually cement the lower high in place in the RSI. And so this is just something to pay attention to as of right now, but nothing to really act on because it's not yet confirmed. And if it does confirm, we might see a slight pullback or perhaps just some choppy sideways price action for maybe a couple of days or so, basically just cooling off in the short term from the bullish price action before potentially more bullish price action later on, because this is not necessarily a bearish trend reversal signal. So as of right now, we're still trending in the bullish direction in the short term. This is not yet confirmed. And right now we've just confirmed a breakout above key resistance. So in the short term, things are still looking bullish. And if we're taking a look at the Bitcoin liquidation heat map, over the last one day, we liquidated a bunch of short positions. We actually had a small short squeeze right here as the price did pump to the upside with that 50 basis point rate cut, of course. And we took out a lot of this liquidity, which was sitting at around 61,500 to 62,000. And I said in my last video, that's a major area of liquidity that we need to pay attention to. And so now that that's taken out, which basically caused a small short squeeze here, we do have more liquidity to the upside, first of all starting close to 62.6k and going up towards around 63,000. And other than that area of liquidity, we do have some liquidity further to the downside at around 58,500 and more liquidity at around 57.2k. But with that being said, of course, those are now below this key area of support right here. So if we see a further pullback, expect support around here, once again, around 60 to 61,000. And so ultimately, the primary area of liquidity that I'll be watching right now is this liquidity that's just above the current price, sitting basically just underneath 63,000. And with that being said, taking a look at Ethereum on the 3-day time frame, technically speaking, we're still within the larger bearish trends because we've not confirmed a bullish trend reversal on the larger time frames. But of course, we're still holding above this major area of support, which is still sitting in between 2150 to 2.2k. And as for resistance, we do have some major resistance right here, sitting at approximately 2450 to 2.5k, and we have a massive level of resistance at around 2.8k, and it's only if we start breaking out above around 2.8k, at that point we can finally start flipping much more bullish again on the larger time frames here, if we start breaking out above some of these key levels of resistance, and especially above 2.8k, which for now has not happened. But once again, as I always say, we can see short-term bullish trends or bullish reliefs here and there during a larger bearish trend. And that's exactly what we've seen over the last 1 to 2 weeks as a result of this bullish divergence as expected, because of course I've been talking about this bullish divergence over the last 1 to 2 weeks pretty much every single day. And so we're likely going to see either a slight bullish relief or at least some choppy sideways price action here in the short term, basically a bit of a break or a relief from that larger bearish trend here in the short term. And considering the fact we have not confirmed any invalidation signals to invalidate the bullish divergence, at least as of right now, the bullish divergence is still actively playing out, and at this point will likely play out at least for the coming days here. And if we're zooming into the shorter term, looking at the 3-hour time frame, of course, we're continuing to play out this oversold signal, as I've been talking about over the last few days. First of all, right back down here when the price was at around 2260 to 2280, give or take, I said it's very likely that in the coming days, we're going to see most likely a slight bounce or at least some choppy sideways price action here in the short term. And so far, that's exactly what we've seen as expected. But right now, after we've now played out this oversold signal over the last few days, the 3-hour RSI is getting very close to overbought territories. Now, it's not there just yet, but it's getting very close to overbought territories. So that will be something to pay attention to moving forward, because of course, overbought is essentially the opposite of oversold, meaning we're approaching an upper limit just in the short term, and we're due to see a bit of a short-term cool-off from all of the bullish price action. And the last couple of times we confirmed an overbought signal here on the 3-hour time frame, we did did actually see a pullback that followed over the next few days. But it's important to mention that we don't always see a pullback like this. Sometimes we might just see a bit of sideways price action, just a bit of a cool off from the bullish price action, and an overbought signal like an oversold signal is not necessarily a trend reversal signal. So it's possible, for example, if the RSI reaches overbought here, maybe over the next 1 or 2 days, it's possible that we could see a slight little cool off and then reset the RSI as we're cooling off, which can give us more room to the upside later on. And so this will be something that I'm paying attention to in the short term over the next 1 or 2 days as the RSI gets very close to overbought territories. But remember, this bullish divergence is still actively playing out right now on the daily time frame. And with that being said, if we're taking a look at the price of Solana on the daily time frame, and right now the price of Solana perfectly bounced again from this exact area of support. This area of support still sitting in between 120 to 128, and we bounced from around 127 to 128. So of course, there's still a lot of buyers in this price range, as I've been saying for many months now on the channel. And as for resistance, we are right now once again running into this area of resistance, which was previous support back here, and that's sitting in between around 138 to 143. But right now, this bullish divergence is still actively playing out, so we're likely going to see at least some choppy sideways price action or a continued bullish relief. Now, keep in mind, this resistance could result in the price struggling around this area for perhaps the next few days, but if we can actually see a confirmed breakout above around 143 in the short term, that would be a very bullish signal if we can see at least a daily candle close above 143. Because in that case, if we can confirm a breakout here and ideally flip this area into new support, we don't really have a lot of resistance immediately to the upside above that resistance right there. And so we'll likely continue more of a short-term bullish trend, potentially all the way up towards close to 160, because the next major area of resistance to look out for is sitting at around 159 to 163 approximately. And we could find a small amount of resistance right here at around 153, give or take. And so overall, the price of Solana is looking more bullish than bearish, at least when we're talking about the short term, because we do have an active bullish divergence playing out. And of course, that 50 basis point rate cut is a bullish factor for markets here in the short term. And so all we're waiting for now is the price to finally break out above this resistance, because this is still acting as a major obstacle here in the short term. But if we can finally break out above 143, then we can finally see much more bullish price action. And if you want to trade these moves in the price of any crypto, once again, check out those links down below this video to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions. And the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.